Amidst the fire hose of breaking Epstein and Bolton news, some major business headlines flew under the radar today. CNBC reports the Commerce Secretary Howard Lutnick said on Friday that the United States government has taken a 10% stake in the embattled chip maker Intel, the Trump administration's latest effort to exert control over corporate America. Wall Street Journal reports Federal Reserve Chair Jerome Powell opened the door for rate cuts next month when he said the labor market might be softening enough to rein in inflation that is being pushed up by tariffs. Today, the Fed chair said economic conditions may warrant a rate change, but he cautioned that tariffs and softening labor markets mean the Fed will, in his words, proceed carefully. Joining us now is Heather Long, chief economist at Navy Federal Credit Union and a contributing columnist at The Washington Post. Heather, great to see you. Let's start with the Fed, because everybody needs context on this, right? The Trump administration is trying to get rid of Jerome Powell, whom Donald Trump insists was put into his job by Joe Biden, though he was put into his job by Donald Trump. He wants the Fed to cut interest rates. Lots of presidents do. That might not be the right thing to do until the Fed has inflation under control. So what did Jerome Powell say about interest rates that might be true and that might be a reaction to what Donald Trump is trying to get him to do?
Yeah, it's a really good question. Look, Fed Chair Powell clearly opened the door big time to a September rate cut. The markets loved it. Wall Street cheered, and they also cheered at the White House. But let's talk about the rationale that Fed Chair Powell used. He really did a 180 and said, look, that his views had changed based on what we saw in that shocking July jobs report. And he acknowledged that there are some really big risks now to the labor market. And basically, we've been living with a job market that's frozen for the past 6 months, almost no hiring outside of the healthcare sector and a few AI jobs. And there's now cracks. You know, we've got the most number of people on unemployment insurance since November 2021. We've got a number of industries that are now laying off workers, including manufacturing that's really been hit hard by the tariffs. And even the retail sector is laying off people. And so that's what he was talking about, that he's seen those risks. And that's the justification for a September rate cut. So I don't think that this is pressuring and caving to the White House. There is a real economic concern here.
And by the way, when you mention healthcare, I mean, that's the one sector that grows jobs sort of no matter what happens. So you almost have to discount that because we grow healthcare jobs all the time in America. There's obviously the danger, and the Fed's stuck between a rock and a hard place because they don't want to create a recession. They don't want to be in a situation where economic growth slows too much because we're losing jobs. But it is harder to fight inflation than it is to fight a recession. And is there enough of a handle on inflation yet that the Fed can start to think about cutting rates back? He did say that the inflation pressures brought on by the tariffs are a problem.
Definitely. There's no doubt that tariffs are causing prices to rise. We've started to see that a little bit, and we are definitely going to see that more in the months to come. There was that much buzzed about Goldman Sachs analysis of all people saying, look, this summer only about 20% of those tariffs have been passed along to consumers, to the middle class. And they're expecting close to 70% by October or November. So it's coming. But I think what's really interesting, what I heard today from Fed Chair Powell, is he described that while prices will rise, he doesn't think it will be a long-lasting inflation crisis. And the reason why is really important, Allie, and that is the middle class can't take it. You know, the middle class budgets, we see this at Navy Federal Credit Union. People are stretched right now. They don't have a lot of extra income to go out and absorb higher prices like they did even in 2022. And so that's why a lot of these brands, you saw Walmart, Home Depot, they're saying that they're going to pass more of the costs on, but they're not talking about major price hikes because they know the consumer can't handle it.